Well, I know we're going to wait for a little bit of time for people to hop in and join. Uh, if anybody has any questions while we're going along, there is that Q&A link down at the bottom. Feel free to just type stuff in. We definitely want to go over any questions that anybody has. Happy to answer everything. Badri, it's always a pleasure to see you. Uh,
Hey, this is super cool, Nate. I know we have talked about doing a webinar together for a while, and I think we have had a really good round of attendance for people signing up. And let's give people a couple minutes. And I know we have talked about doing a webinar. It was nice to see you in BC, and I guess that put the bow on the package, so to speak, and we got this going. Very nice to see you. So
I feel
I
like it
always
was
like
a
to ask.
year ago that we first started talking about doing this at Best Ever Conference when your booth was right next to ours. And I think we had planned to do something at that point. It only took us 365 days to actually make it happen.
Hey, sometimes the really good things take some time, you know? Let's just say that's the case and go on with it. I always
Absolutely.
like to see where people are coming from. Do you want to just type in the chat window? Let's give people a couple minutes. I promise that we'll keep the presentation short and then we'll have plenty of time for questions. Do people want to type in the chat window where they're dialing in from? And we I don't know. I live in Oregon and it rains a lot, but I wish I could show you outside. It's gorgeous outside. If you haven't visited Oregon or the Pacific Northwest in the spring and summer, highly
All
recommend
right.
it. You can do everything: golfing, surfing, hiking, skiing, everything in one place.
Well, let me ask this, Randy. I'm going to be in Nashville in a couple of weeks. I'm going to holler at you, and hopefully we can catch up for dinner and drinks, or at least a happy hour or something. But it's always a pleasure to see you. This is one of the guys, Randy Holland, has done a ton of deals in the past. And you know how you have those people that you see just randomly throughout the country at different events? More and more people that I'm seeing pop up on chat right here. I great seeing everybody from all over the country and happen to see all these same people at the events from time to time. I'm sure you're the exact same, Badri.
Absolutely. I see some familiar, I shouldn't say faces. I don't see the faces, but familiar names.
Love it.
It's
Well,
great
it
to
looks like
have
we
you
got
all
East
here,
Coast, West Coast, and everywhere in between covered.
including Puerto Rico. I guess your colleague Jillian. So, and very nice. We were in Puerto Rico a couple of last year. Beautiful place. I guess I see a lot of people migrating to Puerto Rico to take advantage of this income tax situation, but we won't go into tax planning here right now. So,
Well, it's interesting you mentioned Jillian. Jillian's actually my business partner in one of my other businesses. We acquired a academy that teaches people how to raise capital and implements marketing strategies with them. And it's literally, I think we're like at a 1 year anniversary of when we actually acquired the business. So, Jillian, it's
congratulations.
always a pleasure. Thank you so much for being here today.
Excellent, excellent. All right. Anybody? So just to recap here again, I know Nate mentioned it, but a lot of people joined afterwards. If you don't mind, don't put the question and answers in the chat. We have a separate Q&A panel. Then that way it doesn't get buried in the chat. We would love to answer your questions. We'll have plenty of time for questions. I promise that. And if Nate goes on too long, I'll cut him off. No, I'm kidding. Of course not.
Feel free to
So,
shut me up anytime.
and likewise here, right? So, uh, talk a little bit about, again, super excited to finally get this partnership going. We have talked about it. Uh, we believe that there is a huge opportunity for the marriage between Reg A and the customizable funds. I'm not
All
going to
right.
take Nate's thunder away, and he's going to talk about why Reg A is better. But what I will do is many of you are part of the Avestor ecosystem or have heard of Avestor. I just want to talk a few minutes about the pillars which make Avestor different, so that you kind of get the stage of where we are coming from, and then give a very brief introduction to customizable funds, and then I'll turn it over to Nate. So let me go ahead, and if it's okay with Nate, I'll go ahead and get started here. So
Please.
uh, uh, Avestor is a platform that dramatically simplifies how you raise capital. And again, this is to give you the context more than anything else. Who do we serve? I'm really proud to say we have been growing very rapidly. We'll talk more about it. We have a community of more than 500 fund managers. And one exciting thing is just last week, somebody raised $23 million in 1 week in the platform. And there was
Huge.
one investor who invested $10 million in 1 day. So anyway, the people we serve are operators and sponsors. Uh, every asset class you can think of, a real estate asset class, multifamily, self-storage, retail, hospitality, office space, senior living, mobile home parks, whatever you can think of, right? Capital allocators, everyone is familiar with the term, but most people are, I believe. Capital allocators are people who are raising for other people's deals, not a formal registered investment advisor. You don't want to go there. Debt originators who are doing hard money loans, micro private equity. A lot of interesting businesses are being launched. A couple of doctors, for example, have launched a fund in our platform where you can invest in medical practices, you can invest in the practice itself, or you can invest in just the real estate part of it. Emerging venture capitalists, where you invest in, if we have a customizable venture fund, which is unique, where, I've personally invested in more than 25 startups. I'm sorry. I should have introduced myself. I think I know many of you. My name is Badri Malynur. I'm a co-founder of Avestor. And I've invested in almost many multiple asset classes. And my favorite hobby is to travel across the world. I'm up to about 65 countries. So I'm popping that in there. I should have started with the introduction to myself and crypto managers. Yeah. So raising capital can be very complicated, time consuming, and costly. You have to deal with investor and investment management, deal with our SEC attorney friends. It's a pleasure to work with them, but at the same time, there's a lot of regulations you have to be conforming to. You have to build lead generation funnels, marketing funnels, and legal documents for every entity. So what we have built is something where we solve all these problems with 6 pillars. I'm going to tell you briefly about the 6 pillars, and then I have a slide on each pillar, and I'll go through it relatively fast. There is the technology piece, there is the community, there are the marketplaces which we introduced. I'll talk a little bit about that, both the fund manager marketplace and the investor marketplace. Support, which goes well beyond technical support. We actually provide business and strategic support, and I'll talk about that. Hundreds of hours of educational videos and a completely comprehensive collection of services. And again, I'll talk about that as well. So our technology, very brief, all 3 co-founders of Avestor come from a technology background. I personally have managed a team of several hundred people across multiple continents, and I've built systems which scale to millions of users. Now, I'm not saying Avestor has millions of users, but I've built systems which scale to millions of users. And hopefully Avestor one day will have millions of users. The entire platform is built on Microsoft Azure and the highest levels of security and compliance. We have a world-class investor portal and a manager portal, and we are one of the few investment management apps which has a native Android app and iOS app. The second pillar is our end-to-end collection of services. We have partnered with SEC attorneys like Nate, where we'll help you launch your fund. We set up your bank account. Everything you require for compliance is integrated: KYC, AML, accreditation letters, e-sign agreements, and we do your blue sky filings for you. And we have a variety of marketing partners and in-house marketing resources. There are really 3 kinds of marketing services we provide. There is done with you, done for you, and done by you, and which different trade-offs of time and money. So we can give you completely self-guided content where you can do it yourself, or you can partner with one of our marketing partners and they'll do it for you. Complete collection of tools for administering your own fund. We do all your fund accounting. We don't do asset level accounting, but we do all the fund level accounting, which is included. And then we have a partner attorney network, partner tax preparer network who will file your fund tax return and make it very easy for you in terms of dealing with the taxes there. The third pillar is our community. As I indicated, we are rapidly growing, grew up more than 100% the year before and 70% last year. And we have more than 500 fund managers spanning 40 states and multiple countries. This is a picture of our conference in Dallas, which is going to happen again in Dallas, open only to Avestor fund managers. But this time we have allowed Avestor fund managers to bring a friend. It's not open to the general public. And then we have weekly mastermind calls where we cover a wide range of topics. One of the topics was very interesting last week. Lance Pedersen, one of our strategic advisors, came and talked about how OpenClaw is just revolutionizing how you build AI agents. And that's a topic by itself. Maybe when Nate and I banter, we can talk a little bit about that. Our education, we have a 2-day in-person accelerator in Portland, Oregon. This is far more than just portal training. You actually network with other fund managers. We do this every month. Keep it a relatively small group, less than a dozen. And then we get your portal launched. We help you develop your business plan. We almost treat launching a fund like a franchise, like a McDonald's. If you go buy a McDonald's franchise, they're not going to give you a bunch of manuals and say, go for it, right? We have virtual training, weekly training sessions and deal sharing sessions where you can present your deal to 500 other fund managers, hundreds of hours of educational videos on our Avestor Academy. So that's pillar number 4. And then this is new, our marketplaces. So we have an investor marketplace with more than 800. This is included where you can put your deal in front of 800 investors and who are looking for alternative investments. And our fund manager marketplace, which is pretty popular, where you can present your deal to other fund managers. And of course, that comes at a cost, not for us. I mean, this is all included in your price. But other fund managers can give you a single check for $500,000 or $1 million for your deal. But in return, of course, they expect a portion of your promote. This is the fund of funds model, right? And then our support goes well beyond technical support. We provide strategic support. Somebody was just joking, hey, you guys provide psychological counseling. We almost do that sometimes when 2 partners are not getting along well. We help you to structure your deals. And then we also help you, we have helped multiple people structure their deals to be attractive to other fund managers. And we can, having structured hundreds and hundreds of deals, we have a lot of experience with. So in terms of our plans, I'm definitely not going to pricing and things like that. That's a separate conversation. I'm happy to put our contact information. You can book a call with us and we are happy to talk about it. But basically, there are 3 plans we had in SPA syndication. Most people who come to us, more than 95% want our customizable fund plan. And let me talk a little bit about what a customizable fund is in a second. And then we also have education and community plan, which is more like a mastermind. The customizable fund plan combines all the features we talked about, the technology, the community, the education, the marketplaces, the services, and the premium support. So with that, let me tell you, give a brief introduction to customizable funds. A customizable fund is something where the investor has unprecedented flexibility. Now, this could be a Reg A or a Reg D. Nate is one of our partners for both Reg D and Reg A, our exclusive partner for Reg A. And so investors can come in as part of your engagement. We create a fund entity and a fund management entity. And this fund can invest in an asset, which is completely owned in a separate asset LLC. It can be owned, it can invest in another syndication, or it can even invest in another blind fund. We have people investing in Forex funds and option trading funds. So, and then investors come in, and what we're trying to do is replicate the stock brokerage type of experience for investors. What do I mean by that? You may say that, hey, it's $100,000 minimum to join the fund. And you may want to put 10,000 in this deal, 50,000 in this deal, 50,000 in another deal. And each of these deals can have its own terms and promote structure. So that's the beauty of a customizable fund. So what a customizable fund does, it combines the best of traditional funds and syndications. This is, I think, one of my last slides. I won't go into the rest of the customizable fund presentation. If you have questions, I can come back. Like a traditional fund, when I say a traditional fund, I mean a blind fund. A customizable fund has one set of legal docs. You can raise money continuously. Capital can stay within your ecosystem. We built our customizable fund, our first fund, which several years back, and I was managing investor relations for that. And I can tell you, less than 5% of the money was withdrawn. Not because I think I'm a great salesperson, but it's very easy to tell the investors, hey, you have $50,000 sitting in your account. Do you really want to withdraw it when a deal exits or distributions come in? Do you want to just stay for a few more weeks and we have another deal coming in, right? So it tends to stay in the ecosystem. Like syndications, investors can pick and choose one deal. Each deal have its own term depreciation. Everything flows through, and you can grow your investor base over time. And there are some unique additional benefits. Even if the investors invest in 5 out of 7 deals, you get a single K1, and there is a very, very flexible business model. You cannot do that in a blind fund. Can you imagine going to somebody and saying, "Hey, I really don't know what asset class I'm investing in, but just give me a check for 100,000," right? You need to have a pretty well-defined thesis for a blind fund. But in a customizable fund, even if you go in an asset class which you traditionally didn't do, the investor has a choice. They don't have to invest in the deal. And this is by far the lowest cost option for 4 reasons. Let me recap why. It's one ppm, one blue sky filing at the fund level, tons of savings there, right? If you do, let's say, 4 deals a year and you have investors from 10 states, that's 40 blue sky filings. Here you're doing one at the fund level, less accounting, less taxes, and less number of LLCs. So that's a brief introduction to Avestor and the customizable fund. I can go on and on, but I won't, I promise I won't. With that, if you have any questions, let me take some questions.
I
Uh,
got a
yeah,
ton
go
of
ahead.
questions, if you don't mind.
Sure.
Anybody else
Absolutely.
have questions? Throw it in there. I'm happy to play moderator, but I was just taking notes as we were going along. And it's not just about Avestor and what you're doing, but more generally in what you're seeing in the markets as well. You went through a number of different types of deals that can be done, from the business acquisitions, venture capital, to real estate and syndications. What kind of balance do you see in the Avestor ecosystem of guys that are doing businesses versus guys that are doing real estate?
The majority is still real estate. It used to be a significant majority, but now it's a decent majority. But in real estate, of course, there is a wide range of asset classes within real estate, right? So I would say a third of our funds are non-real estate, but still 66%. I have to look at the exact number. Something on that range, 65% are still real estate. So,
Okay.
and
And
I
I'm
don't know
not
if you would
surprised
call
to hear you
debt funds
say,
real estate, but we have a variety of debt funds as well. So.
and business acquisitions is definitely a growing area. I'll talk a little bit about that later, but just wondering because it just seems like it's growing more and more in terms of its attractiveness. Uh, Another question. Uh, You had talked about the customizable funds. I call it more of a class-based fund, but we've talked in the past, and you can actually do this with series LLCs as well. And all that works through Avestor, correct?
Correct. We can support series LLCs too, but then the advantage of the single blue sky filing goes away. But we can certainly work with you if somebody requires a series LLC structure, we can do that. But having said that, the vast majority of our customers are not using the series LLC structure. But
Okay.
if somebody wants the series LLC structure, we can absolutely accommodate that. No problem. So.
And that's where I jump up and down and say, hey, it's at least in the humblest of my opinions, a series direction can be a safer direction at times.
Mhm.
So I just wanted to emphasize and ask if that is available as well.
That's absolutely available.
Perfect.
Do you want to take Adam's question, Nate? Since you can look at the Q&A. Do you want to take that or you
I
want me
did.
to?
Adam, it's always a pleasure to hear from you. I'm going to cover that in just a little while. So yes, I'll absolutely cover that. Um, but I will ask Charles' question. Charles, it's great to see you as well. I have a Reg D fund in for real estate that's sitting on the shelf. It's waiting for a partner or a property that I like. can I transfer my Reg D into a customizable fund to participate in the development deals, or do I need to start new?
You want me to take that? I mean, it depends on what
Oh,
stage
please.
you're in. Uh, I
I,
mean, you're familiar with Charles. If he's not raised yet, you can always swap the PPM over, but I'll let you speak since you're more familiar with Charles's situation.
well, I think it's a broader question here because this is very similar to Adam's question. But if somebody is already running a fund and they're willing to go through the work of amending their fund to the Avestor style, is that something that can be adjusted?
It would become difficult if they're already running the fund and they've already taken investors. But if they've just not launched the fund yet and they've just done the Reg D filing, I mean, you should jump in here. You can always change the PPM because they have not, no investors have onboarded yet. So.
All right. Well, I'll jump in there that if you're trying to take the next step in your business while not recreating the wheel, the answer is you got to basically recreate the wheel, but you can still use that same entity. What it would take to make the change, because it is such a huge change, is you're going to have to get the investors to actually sign off on the transition from a direct fund, or if we've done a
Right.
very similar series-based fund or customizable style fund for you in the past, you can make the change, but you're going to have to get the investors to sign off on it. It's going to take the time to redo all the documentation. So it's basically starting from scratch anyways. So I don't think that you are saving any time or any money trying to keep the old entity alive, but there's still those opportunities if there's other considerations going on, such as I only want to deal with one LLC. I don't want to deal with two.
I do tend to agree with Nate here. But under a very narrow set of circumstances, it's possible you may be able to convert, but in most cases, you have to start over again.
Yep. Another question that I had for you, could you
Uh-huh.
go a little bit deeper into the community aspect of it?
Sure.
I know that it's very attractive to people to think, oh, I can get into the network and there's other fund-to-fund managers, there's other guys that are raising capital that I can present my opportunity and maybe get a little bit more traction there. Could you speak to that a little bit more?
Absolutely. I think the community is one of our key distinguishing factors. And like I said, the beauty of the community is there is a equal division of fund sponsors and allocators. Think about it. That's a marriage made in heaven, right? Okay, raising money for your deal and capital allocators are looking for deals to raise for. There are various opportunities like our annual conference. We have weekly deal sharing on Thursdays where you can present your deal to other fund managers. You can list your deal in the Avestor Fund Manager Marketplace, which is all included. And there have been so many examples of, yeah, remember the deal which I talked about last week, where the person raised 23 million. One of the other Avestor fund managers invested in the deal. And I just found out today, one Avestor fund manager sold a self-storage unit to another Avestor fund manager. There is all kinds of relationships which are being established, sometimes with our knowledge, sometimes without our knowledge, which is fine. That's the whole point of the community. We don't monitor the community. And there is a Slack channel where you can interact with other fund managers. And as I didn't give a demo of the platform, which I won't right now, of course. There is a member network page. It's almost like a social media channel where you can go in and say, hey, I'm going to Nashville next. I'm just using your example here. I'm not going to Nashville, but since you are, who are the fund managers there? Or a fund manager is I'm looking for fund managers or allocators who are in the Texas area, and let me set up a call. So you'll be able to do that with the member network. The community thank you for the question, Nate. That's a great question. The community is one of our distinguishing factors.
Love it. Do you have any final statements? Otherwise, I'll kind of jump into the
Yeah, why
crowdfunding
don't you
lawyer
do your
side of
thing and then
things.
we'll do, I'll have a few questions about the Reg A fund. Why don't you do your presentation and then we'll have plenty of time for other questions too. So,
Sounds good. And for everybody on here, I am not going to belabor what is already really available to you. If you do want to look in chat, I'm going to be going through high level a brochure that is, it's all about Regulation A and the benefits of it and how it really works. And just so that you understand what we're going to be going through today, it works seamlessly with the Avestor setup. There's just some different considerations about why you would want to go one direction versus the other direction, and we'll cover those. But please, pretty please, if this is of interest of you, I did drop the link to this brochure that I will share right now. And feel free to just jump right in and get a copy yourself. And throughout this, you may see little QR codes in the corner there if you do want to connect and actually discuss a little bit more of it. Just follow that QR code, or again, just reach out. The link, my email, it's all in chat right there. But we're going to talk about Regulation A as kind of a different avenue to raising capital. What Avestor has traditionally done is build it out as more of a Regulation D type model. And with crowdfunding lawyers, we handle all these different regulations, whether it's crowdfunding, Regulation A, or the good old traditional Reg D, which is the most used securities exemption in America. But it's also the most used as well as competitive regulation in America as well. You are targeting those high net worth investors through Reg D that will unfortunately kind of keep you smaller because you're only working with that top 10, 15% of the high net worth in America. So you're really targeting these small guys. I've got clients that have decided, hey, it doesn't make sense to just focus on the high net worth investors. The growth is too slow. The number of investors are, you're just missing the boat on so many more. Rather than targeting only the top 10, 15% of high net worth, you're targeting 100% of everyone in America if you are going the route of Regulation A. There are some kind of additional processes behind it, but I do have clients that are raising anywhere from $25 million to $75 million per year, but they've taken a different marketing approach rather than just doing kind of that friends and family and building the relationships one by one. They're actually mass marketing. And rather than keeping their small business that is building one investor at a time, they're picking up hundreds of investors every single month. Regulation A, it's a different world because you can accept absolutely everyone as an investor. We do work with quite a few of the social media influencers and the types that have been marketing and putting themselves out there. Now, if you've been doing this, really targeting those high net worth investors, hopefully that you've been making a database. You have your funnel, it goes to your CRM, you're dripping on prospects. Well, if you're only dripping on those high net worth investors, you're really selling yourself short. As long as you have systematized your outreach, that's where you start operating more like the Grant Cardone. There's also quite a few of the other social media influencers that we work with. They're getting interest not just from the accredited investors, but from everyone. But it's not really only based on, hey, I'm out there and marketing myself. There's kind of a saying that Regulation A is like a pre-IPO or an IPO light because it does go through some process with the SEC, but all of a sudden you can do a direct capitalization. And there's companies like Boxable that we've worked with that have in fact raised $75 million, and they're already looking at what are the next steps to go public. So this is kind of a good interim part of the reasons why I was asking about businesses and just that transition from only focusing on real estate to now I'm focused on acquiring businesses, maybe doing a roll-up opportunity. What I mean by a roll-up opportunity is maybe you're buying multiple businesses in home repair, HVAC, roofing, buying multiple businesses and rolling them all up together into one larger business. Why would you do that? Because it's more valuable a bigger a business is. And with Regulation A, that gives you kind of that opportunity, not just to raise capital business by business through doing more of a Series Avestor type approach, but you can even offer to prospective businesses or prospective real estate owners. You want to be a part of something bigger, have something more valuable. You can trade in ownership of your business or real estate and take a direct interest into a Regulation A offering now with thousands of investors, increasing the overall value of the fund itself. And just so that you understand again why, you stay small, you're buying those single family homes. You get the value based on the marketplace. But as you grow into multifamily, all of a sudden it goes into a cash flow and a rental revenue type valuation, which just naturally increases the value on a unit by unit basis rather than just trying to do a condo style deal. The same thing applies if you are looking to buy businesses, because if you are actually running and operating your business, maybe you sell it at 3 times profits. But once you can put it into more of a passive, it's running without me situation, now all of a sudden it's worth 6, 7 times your annual profit. So there's good reasoning why to bring businesses or bring real estate together so that you get a higher valuation along with it. Talked
You
about
said
that
you wanted
already.
some questions along. So I did
Please.
have a quick question, if I may. Don't want to interrupt your flow of thought. It's nice to know that Boxable is one of your clients. You know, one of the things about Reg A is you do need to have the marketing machine to go with it. Otherwise, you're spending all this money, and if you don't get appeal to a broad base of investors, how did
Without a doubt.
Boxable achieve that? Are you going to talk a little bit about that? Was it Facebook ads or all of the above? Do you want to share a little bit on how they achieved it?
I'm happy to. Boxable's approach was very much a marketing boosting ads, but also creating, they got good guidance and created some more viral style videos that just captured people's attention. And Boxable, it really resonated with the masses because you, I, and everybody on here knows that real estate has gotten so expensive that if there was a way to offer a smaller unit, these mini homes as an example, then it really resonated with the masses. It created that interest with the masses, the viral video with the masses, and that really made a difference for them. So there is, at the end of the day, you do have to be marketing yourself. And the more marketing you do, the more capital you raise. And that's true for whether it's Reg D or Reg A. The more marketing, the more investors. But really, it's Regulation A is there to even juice it higher so that you're not missing out on that 75, 85% of people that may in fact be interested in what you're doing. But you're missing the boat entirely just because your net can't catch them. So that's you do have to be marketing. You do have to be marketing more major, I did bring up a client of ours that is raising about $27 million per year. They came from nothing. Nobody knew who they were. And within a quick year or two, they're raising that $27 million. Well, there was a system that they used, and that was they started out with a Regulation D that they leveraged that high net worth investors with their business plan to raise the capital, not just to organize and pursue their Regulation A opportunity, but they also funded their marketing and they hired a marketing agency and they're running virtual summits and virtual events throughout the country. And that's the way that they have created their filter from the marketing with their agency to some sort of event, whether it's live or online, to actually having sales guys that are out there making the sales. And they're finding that the cost of capital, it costs money to raise money, but it's still low enough that it made sense for them to hire a marketing agency to really expand that net. Because let's be honest, this is that democratization of investments because the masses have never been able to invest into these syndications. I had Adam Rar was asking about, I've got this 506B, can I roll that into a Regulation A offering? And a great question. The answer is no, we just start from scratch. But to explain why, well, there's some steps to the compliance that make it more incentivizing. But you're already working with non-accredited investors. Why not work with 1,000 more? And if your mousetrap is already set up to get out there and be marketing, 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 then this is a way to actually bring in 100%. Generally, I'll say that with the unaccredited investor aspect of it, there is generally a lower investment limit. Maybe it's $5,000 or $10,000. And so there's a saying that non-accredited investors, they're a big pain to deal with. And the reality is, when you're asking an investor for 10%, 20% of their net worth, such as requiring a minimum $50,000 investment into a Reg D, these non-accredited investors, they're scared. If things go wrong, if distributions don't happen, then they're worried that, okay, am I going to lose my money? I was expecting this as part of my cash flow for living if I'm retired. So there's reasons why the big investment for the non-accredited investors literally makes them more of a pain because of that fear factor. Where with Regulation A, it does open up those opportunities for the lower investment thresholds. Now, all of a sudden, they're investing 5%, give or take, of their net worth. The non-accredited investors are just less fearful. And you don't deal with them on a one-by-one basis. You communicate with non-accredited through mass communication strategies that ultimately you want to answer their questions, but you may answer an individual question through a mass quarterly update. So everybody gets the answer all at once rather than having those individual conversations. So I do always want to bring that up, especially in the concept of a 506B offering and the risks there dealing with non-accredited investors versus why that's not such a concern when you go to more the mass marketing with Regulation A. So hopefully that makes a ton of sense and Adam answers your question as well. I see another question here from Mr. Anonymous.
Let me
It
take
seems like
that,
the Reg
Nate,
CF and Reg
because
D. Sorry, go ahead.
because it was asking if Avestor can specifically support this type of raise. So the question was, it seems like a Reg CF and a Reg D side by side can accomplish the same as Reg A with less legal and accounting expense. I'll let Nate comment on that, but I'll address the second part. Can Avestor support this type of raise? A Reg CF has to be raised only on a SEC approved portal. And the short answer is Avestor is not an approved SEC Reg CF portal. But as far as whether a Reg CF and a Reg D is a decent alternative to Reg A, I could talk about it, but I'll let the SEC attorney here speak. So.
It actually is a good alternative. And the question becomes really what's your target and how big are you aiming? If you're focused on a singular real estate deal, one of the big issues or limitations with Reg CF is you can only raise up to $5 million from non-accredited investors. That may be good enough for a real estate deal or two. But if you're trying to turn your business into a scalable platform that you can run for years, Regulation A is the vehicle and the regulation that can make it all, well, realistic. So I actually don't dislike it all. I love the Reg CF, Reg D as a starting point. And it's also incentivizing to be able to start your mass marketing under that, kind of dipping your toe in versus jumping in feet first. So I don't dissuade anybody from doing the Reg D, Reg CF, but to really be able to step up your business, that is where the Regulation A is the only option. And Badri, I meant to talk to you about this earlier. There may be some strategies and options to plug in a portal with an Avestor hosted deal.
Okay.
So I'm
We are
not even
open
going
to
to
it.
say
I know
it's not even possible.
we briefly discussed that a year back, but it's not been a priority. But the short answer is, if somebody asked me today, do you support Reg CF? The answer is no. But with partners like Nate, hey, we are absolutely willing to explore.
We
Nate,
have,
there was one other question. What is the cost of Reg A legal docs versus the others? Sorry, go ahead and finish the others, but I don't know if you missed that from Rich Thompson. Well, I
no
will
problem.
defer to you in talking about what's the cost of Reg A. I know you have brought the cost down substantially, and I'll let you talk about it.
Sure. So doing the Reg D, and I'll be pretty transparent. Working with Avestor, we're charging $10,000 to get a Reg D onto their platform. With Regulation A, it is way more expensive. I'm not going to pretend like it's not. It's the benefits that go along with it. If you talk to any other law firm, it's like $70,000 to $100,000 to actually do those types of Regulation A qualification processes. That's not us. We've systematized things. We've been able to reduce the time where we do charge 35,000 for it, but we're literally half the price of anybody else, and we can put this on Avestor, which no one else is able to do, to really create that flexibility for you.
I before we announced this official partnership, we did talk to a few attorneys, and I can absolutely second and not collaborate, corroborate what Nate is saying. I think 35,000 for a Reg A, for people who are coming from the Reg D might think it's expensive, but for a Reg A with all the benefits it offers is a fantastic price. So.
It's just a different animal entirely. And what we're finding more and more is the guys that have been focused on the Reg D, they've gotten to their end of their network. They're starting to market outside of their network. Well, so is everybody else. It's the most common exemption that there is. So just the competition over that top 10, top 15% of investors, it's getting more intense. And I love to hear all about how your latest client swung a $15+ million deal in a matter of a week with a $10 million investor, it's just not that easy in today's market.
It's not.
And
It's not.
that's where going this direction of doing a Regulation A versus Regulation D, it just opens up a whole new world that frankly never even existed before. So
So let me ask you a question. Um, what, in your opinion, since you have done several Reg As before, what do you think is the minimum amount you should be raising to do a Reg A? For $500,000, it doesn't make sense. I'm just giving an example. What do you think is the threshold?
I go with 20 million.
About 20
And
million?
the
Okay.
20 million with a goal of scaling. Because with the Regulation A offering, and I talk about it more as a platform versus a one-time deal, you can raise capital for over 3 years and you can raise up to $75 million. So if you have a goal of continuing to increase your capital, do more deals, if you at least are targeting $20 million, now you got $20 million times three over those 3 years, you're already getting pretty close to that $75 million. And I firmly believe for anybody that goes this route, it's a different avenue for capital. And because it has not been really pursued by the masses yet, and these are investments that were never available to other people in the past, the regular, the normal people, not the high net worth, that you do start to see that exponential growth compared to just staying the course with the high net worth investors with the traditional Reg D.
Not to get into the political side of things, but I guess it's safe to say the current administration is very supportive, shall we say, of alternative investments being exposed to the broad audience. So that's a favorable environment for something like this.
Well, I won't get too political, but the fact of the matter is, actually, the chief enforcement officer for the SEC just quit without notice, just I resign because they were not being allowed to pursue a lot of investigations that they had wanted to because the administration is taking more of a hands off when it comes to securities and investments. So, without a doubt, it is easier to get these deals through. We have been successful with doing quite a few cryptocurrency type deals, which were basically a no-go in the past. And now we just are getting through those the same with the timing and the work as any other of these deals. And I will say that in general, Regulation A, there is more work and more time behind it. And it usually takes 4 to 6 months on the long side to actually go through. It goes through a qualification process with the SEC. So it's not as simple as just here's your PPM a week, 2 weeks, 3 weeks out, and good luck and have fun. It is just a different animal entirely.
Just to build on that, I think the key distinction is in Reg D, you're just filing for an exemption. It's just a filing. There is no approval process. Whereas in a Reg A, correct me if I'm wrong, it's a formal approval, and that's why it takes the extended amount of time. So
Oh, exactly. And it's you go year by year with audits and going through the process with the SEC. There's continuing filings. So there's just more to it in general.
I know your brochure covers this. You did bring up audits, so that is something you should be aware of. There is additional cost in audits, which you have to factor in. And that's why I think Nate gave some very good advice. If you're really raising a few $1 million, three, four, five, Reg A may not be the best option. You really should be looking at, he said 20, I would say at least 10, but something north of that so, per year. So.
If you're trying to raise $5 to $10 million, that Reg D, Reg CF side by side strategy actually does work just fine. And Badri, we will talk a little bit more offline about how it can work in with Avestor, even with the system that you have. I see another question from Flint. Tax filings with Reg A. If we have thousands of investors, that's a ridiculous K1 undertaking. And you're correct. When we're doing a real estate Reg A, generally we do them as REITs. And REITs, the main reasons why is there's not K1s. Here's some more information. It's in our brochure. Please download it as well. But for real estate, we like to go the REIT direction. REITs, at the end of the year, you send out a 1099 based on the amount of distributions and dividends that were paid out. So you don't have to do the hundreds to thousands of K1s. But oftentimes you have the smaller investors. So to use an example of one of our favorite clients, Grant Cardone, he does his Reg A. It's specifically structured for smaller investors with a $5,000 or $10,000 limit. It's done as a REIT. So at the end of the year, rather than doing K1s, you're just doing these 1099s. Those investors don't get the benefit of that bonus depreciation. But side by side with Regulation A, he will often do a Reg D partnership syndication with the people that really care and benefit from the depreciation. So where I've shared and brought up the side by side with a Reg D and a Reg CF, it is actually possible to do that with a Reg A and a Reg D as well. And it just becomes a little bit of a different targeting that you're looking at for who invests in what side. So you may have a funnel that pushes high net worth investors one direction, low net worth investors another. So that's where it all can still continue to work together seamlessly. Hopefully, Flint, that makes a lot of sense where we generally will structure to avoid those K1 issues.
Matter question, if you want to take that, Nate.
Sure.
Could I convert
Adam,
my 506B to 506C and use Avestor, or Avestor is best at starting fresh from a new fund? I can jump in, but go ahead and take it. And if there's anything to add,
I was just going to say that Adam kind of got the same answer as before. You would have to go through the work and time to get investors to sign off on a new structure entirely. We will regularly do a 506B, flip it to a 506C. That's easy as long as you're running with the same deal. With Avestor, really the biggest benefits of Avestor is creating these customizable funds, and it's a material change to your business strategy. So you just want to start fresh. You're not going to save any money. There's more work on you to get all the investors to sign off on it. It's easier to just start fresh, to be perfectly honest.
yeah,
But I
I agree.
respect the goal of like, I don't want another entity.
You could reuse the management entity. Obviously, you cannot reuse the fund entity, but there are some trade-offs in using cons and pros and cons with reusing the management entity. So
I call that syndicate the syndicator, where it's more of a GP fund that you can bring money into the top level to keep doing a lot of the lower level deals. And maybe that is something that Avestor, you can do more of a merger transaction from your 506B into a customizable fund. I think that that would be probably not too difficult, other than you're still going to have to get the investors to sign off on it. You're
it's
still
a
going to have to
significant change.
go through the time and work to restructure the offering. So I don't know if it makes sense or not, but I do want to throw that out.
I think Eugene had a question for you. It's in the webinar chat and not in the questions. If you want, I can read it out, but maybe you can read it out yourself.
Please go for it.
Uh, Eugene had a question. Hey, Nate, you mentioned crypto deals and it sparked my interest. I'm one of the founders of a crypto platform we've been building for the last 4 years. We are looking to raise capital to advertise the platform and increase exposure to the general public. What will you recommend for this kind of a deal? I do have a couple of thoughts I want to share, but I'll let Nate first speak.
Share first, and because I have definite comments as well.
Okay. So, well, we occasionally do get startup founders, which is what this is more of a you're not racing for the crypto platform, I'm assuming you're racing for the company. Just if I understand the question right, the platform is a different thing, but you're raising money for the fund itself, for the company itself. We have a variety of startup founders who come to us, and our answer is as follows. We're working on a very interesting structure. It's not quite ready legally yet, where you can continuously raise for your company. You can do your pre-seed, seed. We are putting the I's, crossing the T's, dotting the I's. Did I get the expression right? And because we want to make sure it works with venture companies. But imagine a customizable fund where you do your pre-seed at a valuation and your pre-seed B at another valuation and the seed at another valuation. So that's kind of what we are working on. And the other alternative is to do a simple syndication. I mean, you can do separate syndications for each deal. Avestor can certainly help you with that, but I'll let Nate add whatever he wants there. So.
Actually, what we're talking about with the Regulation A customizable funds strategy is, Eugene, exactly what you need to do. Because you can have one of these classes to fund your business.
Exactly.
So you can get that top level management size funding the operations. But at the same time, for the various cryptocurrency and the tokens that are getting released, those can also be released as separate series under the customizable fund as well. So you still get all of the benefits of one deal to fund the different types of crypto tokenizations as well as your business itself. So in the crypto world, to be perfectly honest, this is about the only way to go. So hopefully that makes sense as well. Well, I think we covered a lot of information here.
I
Hopefully
think
it's not
so. I think
information
so.
overload.
We have 4 minutes left. So if someone has any other questions, and maybe Nate can conclude with some parting thoughts. I'm certainly, Avestor is very excited to work with the crowdfunding lawyers, and I think Reg A is hopefully one of multiple projects we are going to launch together. And Reg A, Nate has provided a very compelling price, and we are very excited to work with you and hope to see a lot of Reg A funds coming out. And it's a new beast. I mean, beast in the best sense of the word, a Reg A customizable fund.
It is a new beast, and it's one that frankly hasn't been used in the past. But the interest in not just interest, but utilization is increasing, especially in the current environment where the everyday investors haven't been allowed to participate. Now they can, and now there's a vehicle for it. I did drop once again the brochure if you haven't received that, also my contact information. I love meeting, chatting, and diving in deep with people's opportunities, brainstorming and dreaming with you. So if this does make sense, please reach out. I'd love to figure out from a deeper concept whether it works.
I dropped my chat information in the chat window as well. I think we can stay as long as needed. There are a couple more questions which came in, one in the chat window and one in Q&A. Go for it, Nick.
Sure. Well, Christopher wants to set up a fund that it's a hybrid real estate, pays out at the sale as well as investing in stocks. Is that possible? And I will say that there's different legal considerations. With a Reg D fund, you do have 100 investor limit if you are heavy with stocks. And with Regulation A, you are obligated to invest in less than 45% of your assets need to be in stocks. But as long as 55% or more is in real estate, there's no limitation other than the other thing that I will bring up. You may be acting as an investment advisor. There may be regulations, licensing, and registrations that are required on that side. We're very used to dealing with the investment advisor issues. I'm just going to say make sure that you're working with competent investment counsel because a lot of these syndication and securities attorneys don't understand, don't practice the investment advisor laws. There's just more steps that you need to pay attention to, and you have to figure out if you need to be licensed or not. You don't need to be if you're operating real estate, but as soon as you start talking about, I'm going to be trading options or stocks, I'm more acting like a mutual fund, there's a whole nother realm of considerations there. And if you want to just continue on, I see question after question coming in.
If you're available, I absolutely don't mind going a little more. Um, yeah, CJ is saying, what do you see as the average success fee on a Reg A raise for a portal or a fund admin? And then slightly, maybe you understand the question. Is this what you would pay a broker dealer? Or you think is that what CJ is asking? Or
That's
okay,
exactly what's being asked with the success fee.
okay. Um,
And
I'll let you speak. Yeah, go ahead.
yeah, and it really depends on who the broker dealer is and if you even need a broker dealer. There are
Exactly.
compliance broker dealers that may charge 1% or 2% just for their compliance services, but they don't help with any of the sales. When I hear success fee, I think commission for the sale. And when we're
Exactly.
talking about more the private investments, it's anywhere from 7% up to 10% is more on the high side. But you do have to be working with a broker dealer that's licensed in order to pay a success fee. It's doable, it's possible, and people are running Regulation A offerings with broker dealers, and they're out there. And it works because a lot of broker dealers won't even touch a deal unless you're raising 30, $50 million or more. And the Regulation A meets that criteria, but also expands the offerings to all of the broker-dealer clients versus just those accredited only that I'm going to say are highly valued and a lot of competition to get them.
Rich asks, if the deal my fund in investing in requires accredited investors, can a Reg A fund invest into this project? Absolutely.
Yes,
So
that's the easiest answer. Yes.
there you go. Yes. No need to say more. So,
The only additional thing is the always attorney, but there's some other considerations that go along with it. But 100%, the Reg A can invest side by side with the Reg D into any particular assets. And that's oftentimes the way it's done because of trying to maintain REIT regulations on the Reg A, so you don't have 100K ones at the same time.
let's maybe
Well,
do a little poll. Um, how many of you do you think would be potentially interested in a Reg A after listening to this presentation? Don't worry, we're not going to haunt you with emails. And
I don't
if
know,
not,
Badri.
why not?
I know you. You would start calling people every other day.
No. I
Oh, we're
promise
all
I
busy
won't.
people.
And if
Eugene,
you're
I
thinking
definitely
of
look
not
forward to
doing a
talking to you
reggae,
about this.
would be interested in your feedback as to why you think you won't do a reggae. It's just conversation where other people can learn from your concerns too, and maybe Nate can address some of those concerns. Rich says reggae maybe in a year or two. Yeah, reggae is not for anybody who's, like I said, who's not raising 10, 20 million a year. It's just not
Well,
worth it.
Rich, and let me speak to that. Yeah, I'm interested in reggae in a year or two. Don't stop your marketing. Market everywhere to everyone. Build your CRM. with the non-accredited as well as the accredited. Make sure that you're tagging the prospective investors in their suitability. So then when it is that right time for you, you already have that list of potential investors that frankly were never even able to invest before, but now they can. So just because you're saying now's the right time, maybe later will make more sense, it shouldn't change the get out, start marketing now, start building your list. If anybody doesn't have their funnel going from marketing to lead magnet to your CRM to a drip, definitely reach out to me just to say hi. That's the type of setup that Jillian also helps set up as well. So I would make the connection there. So yes, it's possible. Just get started now versus later.
Couple more questions if you want to jump in, or I can
Yeah,
add.
sure. Flint's asking for marketing firms. There's a bunch of them that will focus on more the crowdfunding style, crowdfunding meaning capturing everyone. Most of them are really focused on boosting ads and pay per click. I, I won't say I have a particular favorite versus five other favorites. Each one of them have their own type of services, their own fees, their own success rates. Oftentimes, hey, I don't want to spend $10,000, $15,000 a month, but maybe $5,000 a month makes sense. And of course, it comes to success and how much capital is able to be brought in, because ultimately the capital itself pays for that marketing. Reach out to me though. I always will make multiple introductions. I just won't say if one marketing firm is better than another.
Let me take the question from the anonymous attendee. Will the investors Avestor portal experience be the same for Reg A as current Reg B investors? I think he means Reg D. Or will it be simplified like a CF platform? So there will be some, it won't be exactly like a CF platform. There will be some differences, especially if we get into the series LLC structure. It'll be a little more similar to the Avestor syndication experience because each of this will be a little different. It's best, I mean, it's a more complex question to answer live. I mean, it's best if you contact us and we'll walk you through what the experience will be. So,
And we've got Amir. I'm trying to put structure for non-combustible fire resistance ICF structures in California. I'm starting from step one. Reg A sounds over my network. Yes, but that is where, and Amir, I remember you doing that side by side with a Reg CF as well as a Reg D so that everybody can invest into your opportunity, still can make a ton of sense. And Badri, I will speak to you offline about the strategies of where you may be able to bring Reg CF into the fold, even for the Avestor customizable funds.
okay, the questions keep coming in, so that's okay. And let's keep going. I'm available if you are.
Yeah. Let's keep on rolling. So I'll answer Eugene because we are going to be definitely speaking at some point in the near future. If I heard it correctly, we can combine Reg A and Reg D in the same offering. Because we already have the Reg D fund, can we add the Reg A in the same way, or does it have to be a new one? We can add it. The hurdle to going from Reg D to Reg A is you have to have audited financials. And if you have a long-term fund that's been operating, the cost of the audited financials can be more cumbersome. Oftentimes, it always comes down to the number of transactions. Earlier stage, we'll go Reg D, close that once we file with the SEC for the Regulation A offering. That's how the Reg A actually gets paid for. But we'll usually do that earlier stage just to keep the cost of the audit down. It makes no difference from the legal side, from the process side. It's just a cost savings from the CPAs. Amir, Chris, y'all may have to connect. All right, Anonymous, what are you seeing average legal fees on a Reg A offering versus Reg D? Reg D, we're generally between 10 and 15,000. With Reg A, we're charging a fixed 35,000, which is half the price of every other law firm that's out there. Eugene, let's talk, because if you already have your audit, it may not be a major switch issue to consider. Chris, reach out to me. Amir, reach out to me, and I will connect the two of you by email so y'all can help one another.
That's what this is all about. Even if we can't help you, somebody else in the community will help you. So
That's what we're all here for. Well, Badri, it was a pleasure. I feel like we brought a lot of value to people. Hopefully we did. If anybody says we didn't, they're lying.
we will remove them from the list. No, I'm kidding. No, thank you all. I realize you're taking a lot of time from your precious day to come join us. And I think you'll see that both Nate and I and the entire Avestor family actually it's even if you don't join the platform, or even I'm sure if you don't actually work with Nate as a client, we are happy to help you. So please reach out to us, even if you have some questions you want to discuss. I've found that sometimes people have talked to me 2 or 3 years back, and they finally come join 2 or 3 years later, or even if you don't join, it's okay. I really do appreciate you taking the time. We do have this monthly webinar series. Very excited to have Nate here as a kind of think of it as a public announcement of our partnership. And we look forward to several successful Reg A funds under us. And hopefully
Absolutely.
that
And I
will
will
create
say
a
that
slightly more. Go ahead.
sorry, my apologies. I totally cut you off.
Oh, no. Hopefully that'll create an entire network of Reg A customizable funds in a huge range of asset classes. And it'll be a great addition to our investor marketplace too. One thing I wanted to say is we are finding that a lot of the marketplaces are kind of becoming, they're really being bought by others, and there is not really good investor marketplaces out there for alternative investments. While we
Right.
are not there yet, we hope to fill that gap and provide a wide range of alternative investments for investors. But please go ahead.
Love it. And I just wanted to kind of rehash for everybody. I'm sharing a lot about Regulation A because it's kind of a newer vehicle that, frankly, people just don't know about. But we absolutely help with all the securities regulations. So doesn't matter if this is the avenue or it doesn't make sense. We do help with everything. So please reach out. It is all about you, what fits best for your business plan. And we take our time to get to know you so that we do the right things that matches where you're at with your business, with your capital raise, with your experience. And Regulation A may not ultimately be the best choice for you. And we're not here to sell you on one way versus another. We're just here to share, but we're happy to help in any way, shape, or form.
Likewise. I'll just say likewise and stop at that.
Thank you all, Badri. Randy, I look forward to happy hour in Nashville.
All right. I need to see pictures of that. All right. Thank you all, and hope to see you in a future webinar. Take care.
Thank you.
Bye-bye.